How do I apply for a conventional home loan? Hi, my name is Kelly Zitlow, and I've been helping people navigate the dream of home ownership for over 25 years. I'm often asked, how do I apply for a conventional loan? Today, we'll answer that question, and we'll also talk about what is a conventional loan, what are the benefits of a conventional loan, who can apply for a conventional loan, where to apply for a conventional loan, and more. Before we get started, please take a moment to subscribe to this channel. I work with a lot of first-time home buyers, so if you know someone who is a first-time home buyer, please feel free to share this video with them. Okay, so let's get into it. The majority of home loans in our country are going to be what we call conventional conforming loans, which again just means that they're going to fall underneath the underwriting criteria for Fannie Mae and Freddie Mac. And the first thing to know is that each area, so each state and or city or county, will fall into a conventional loan limit. And that's going to vary based on the state across the country. So every state's going to be a little bit different. And every year, those loan limits can change. So they can go up or down. Now, over the last several years, they've been going up every little bit every year. And generally, we get the announcement at the end of the year of what the new conventional conforming loan limit is going to be. Now, some of the benefits of a conventional loan when compared to other types of residential home financing. One of the things I love most about conventional financing is that, one, it allows for you to purchase properties other than just a primary residence. So you can use a conventional loan to purchase a primary residence, a second or a vacation home, or an investment property. Some of the other loan programs available in the market today do not allow for secondary residences or investment properties when you're looking at those loan programs, such as VA or FHA. The other benefit to a conforming conventional loan is how mortgage insurance works on a conventional loan is different than how it works on FHA. Now, on a conventional loan, at some point in the life of the loan, that mortgage insurance is going to automatically drop off. Now, anyone can apply for a conventional loan. There's no restrictions on who gets a conventional loan other than you have to meet the lending criteria. Now, this is probably the number one myth I hear all the time from especially first-time homebuyers. They think that they have to do 20% down. That's not the case. Now, conventional conforming loans will allow for as low as 3% down in some scenarios. You have to talk with a lender that can hear your story, look at your credit, look at your income, and be able to put together a strategy and tell you what your minimum down payment is. But conventional conforming loans will allow for as low as a 3% down payment. From a credit score perspective, conventional conforming loans will allow for a credit score as low as 620. But I caution you that also with conventional conforming loans, lenders primarily use automated underwriting engines for approval. And the lower the credit score is, the more difficult it is, especially with a lower down payment, to get that loan approved through the automated underwriting engine. So it really doesn't matter what a lender says the minimum credit score is. For example, in this scenario, if that loan can't get approved through the automated underwriting system on a conventional conforming loan, it's going to be challenging to get that loan done because most lenders in our country, again, use the automated underwriting engines because it gives them protection when they go to sell those loans off in the secondary market. So how do you apply for a conventional loan? Well, first and foremost, you want to work with a lender that you feel comfortable with. And sometimes that's just not who you find online. So I would talk with family members or relatives that have purchased houses. Find out if they had a good lending experience and they recommend their lender. If you're working with a real estate agent, they are a great resource for competent lenders because they have a proven history with those lenders. So find a lender. That's step one. Step two is going to be complete the home loan pre-qualification application. Now, many times you can do that online with the lender through their website, or in some cases you can do that over the phone if you're not comfortable completing the online application. But most lenders today have very good online applications. It's super efficient. You can usually get through an online home loan pre-qualification application within 10 to 15 minutes. In that application, whether it's over the phone or online, the questions that you're going to be asked are going to be your name, your residence history for the last 2 years, your social security number, your date of birth, your employment history for the last 2 years if you are working and using that income to qualify for the home loan. Those are the types of questions that go into that online application or over the phone application. And don't forget assets. So the lender absolutely is going to want to know if you have money set aside for a down payment and closing cost, where those monies are, meaning do you have them? Are you expecting to get them? Are they going to be a gift, etc. After you've completed the home loan pre-qualification application, the lender is going to pull your credit report. Now, heads up, keep in mind that the credit score algorithms for the home loan process differ. So if you're monitoring your credit online through either what your bank gives you or one of the credit agencies direct, those scoring models, it's a different algorithm for those scoring models. So it's going to very likely look different than what the lender gets from a credit score standpoint when they pull your credit report. And then the lender is going to ask you to provide some documentation. Now, I know this isn't the fun part of the process, but it's so essential that the lender has your W-2s, potentially a tax return, your pay stubs, your asset statements, because all of that information is what is reviewed when you are actually given that stamp of approval for your home loan. And the sooner the lender has all of that in their hands, the better equipped they are to be able to determine if there's any red flags or if there's things that need to be discussed prior to you going under contract for that home. Because what we don't want is that you get under contract and for whatever reason, something happens. Maybe it's going to be problematic for you to get loan approval. So the sooner in the pre-qualification process that a lender has your documentation, the best chance you're going to have to be set up for success during this process. After you've completed the home loan pre-qualification application, your credit is pulled, you've provided your documentation to the lender, they are going to review all of that and let you know if your criteria meets the lending guidelines. And if it does, then they're going to issue you a pre-qualification letter so you can get out and start shopping. All right, are you ready for that number one tip for a conventional loan? Well, here it is. It is mortgage insurance. How mortgage insurance works on conventional loans is completely different than how it works on an FHA loan. On a conventional loan, mortgage insurance will automatically drop off at some point in the life of the loan once your loan balance reaches a certain amortization level, assuming you haven't had any late payment and aren't in default. But in an FHA loan, depending on your down payment, that mortgage insurance may never drop off. So when we're counseling and giving advice and guidance for buyers, we're looking at their overall scenario and determining if a conventional loan is the best option. Now, in some cases, it may not be, because with conventional loans, the cost of mortgage insurance as well as the interest rate and the closing costs are driven by credit score. Conventional loans are much more credit score driven and focused on credit score than, let's say, an FHA loan or a VA loan. And as a reminder, on a conventional loan, if you put 20% down, you will not be required to carry mortgage insurance. Again, unlike an FHA loan, if you put down 20%, you're still paying mortgage insurance because that's how an FHA loan is structured. So now you know how to apply for a conventional loan. If you got value out of today's video, please like this video. If you have questions, comment below and don't forget to subscribe. Until next time.